I'm here to talk a little bit about the year that we're in, the outlook for the year ahead, and the global sort of macroeconomic outlook, but just through the prism of the Middle East. Of course, there's many ways to skin a cat, but we live here, and so we're interested in the cat that is here and how we look at the world from this particular perspective. And so we're going to take you through a few minutes of an outlook of the Middle East, through the Middle East to the world. And of course, with the sort of caveat of 3 months into Trump, which sort of dictates everything, even my 10-year-old kids' views of things. So we're looking at the world from a point of view of 3 geographies, but ultimately through the gateway of the Middle East. The impact of this region on our work, on our activities, the world being the second, what's happening in the world that is of most significance to us, or that is most significant to the world, at least from my point of view. Of course, this is just an op-ed kind of presentation, an opinion editorial. There's 1,000 things you can pick apart about what I'm going to say, and that's fine. And at the end, maybe you have a question or two or a comment to say, that's rubbish. But nonetheless, we're going to look at this from a world point of view, because of course, we are a conduit to the world. We are a global hub. We are in a region that serves the world in many different ways, and the world obviously comes to us. The third sort of then circle in our Venn diagram is, as I call it, the galaxy, the sort of the asteroid. What asteroid's out there is going to hit us, or potentially hit us, and what that might mean. And ultimately, as we say in the little tagline there, no woman is an island. Ultimately, no man is an island, as the sort of historical phrase is. It is the nexus of these 3 circles that is where we live every day, where we work every day, and where the Middle East intersects with the world, and the world intersects with the Middle East, and ultimately in the context of the galaxy in this story, what that means. So 2025 for the Middle East, to me, the one thing that stands out, and it's sort of why now, but ultimately maximum energy. When we wake up every day, in the Gulf in particular, but in the Middle East as a whole, the North Star is how do we maximize energy production? And you might say, well, what's that different to last year? Maximizing oil and gas production has certainly been a North Star for a very long time. And certainly maximizing oil production has even been longer. But now it's maximize energy production. Every type of energy, maximize its production as much as possible. And the sort of most immediate part of that narrative is just last week with the US Energy Secretary in Saudi Arabia looking to establish a nuclear agreement with the Saudi to facilitate the creation of a civilian nuclear industry. And the Saudis are talking about up to as many as 30 nuclear power plants in Saudi Arabia to drive forward their economic plans and vision. And of course, on the other side of that coin, Saudi Arabia still burns close to 1 million barrels of liquid fuel a year to generate electricity. So they have huge requirements today, never mind about tomorrow. So this idea of maximizing energy production here in the UAE, we're all familiar with, there's already 4 nuclear power plants in Abu Dhabi. There's solar as much as we can. There's hydrogen now being actioned in Saudi as well, but also in Oman, where they had their first auction off of hydrogen production concession areas last year. Kuwait announced just a few months ago they were going to spend $30 billion on more oil field development, more expansion of oil production capacity in Kuwait. The UAE is already at 5 million barrels a day. Abu Dhabi looking to go to 6 million barrels a day. Iraq is at 36, looking to go to 7 million barrels a day. So maximizing energy production is very much the North Star for the Gulf. It has been for a long time, but now it's right across the full spectrum. So no matter what you read in the newspapers about, ExxonMobil or Shell or BP more notably pulling back from their commitment to the energy transition and wind power and solar and battery and whatever else, the Gulf, the Middle East is still full steam ahead, maximizing energy production. And all of the associated supply chains of that, all of the associated opportunities that presents, leveraging what you already have in massive industrial production, moving massively downstream. ADNOC made the biggest acquisition of a Middle East company, buying a European company 6 months ago with the acquisition of the chemicals company Covestro in Germany for $11 billion. They just bought another, I think it was multiple billions, I can't remember the number, of a huge share of a natural gas production facility for the first time in the United States. So it's not only maximize energy production here, but also right through the value chain of opportunity downstream and upstream across the world. So this is and in some ways, 50 years later, we're at only the beginning of that journey, as all of these companies look to go international and look to transform their fiscal model. ADNOC in recent years has IPO'd its distribution, IPO'd its ADNOC drilling, IPO'd ADNOC gas. Aramco is now a publicly traded company, incrementally selling off more and more of its shares. They're now increasingly going to the debt markets. So this journey is really only in its foothills as to where it's going. Maximize energy production in all of its architecture. Moving right through the value chain to downstream, midstream. Now they all have trading companies. The latest, you've got ADNOC trading, ADNOC Global trading, Aramco trading. You've got this year KPC, Kuwait Petroleum Corporation trading, only joining this year. OQ trading has been around for a few years. So they're now operating right through the value chain of the trading opportunity, right through the last dollar of value opportunity, rather than just sell your crude off to an international trading company at a slight discount, and they get to make the premium in the market. So maximizing energy in all of its three-dimensional aspects. I don't think we've started a year where that has been more pronounced than 2025. And that's why, to me, it is the single most important North Star for the Middle East. And that includes Egypt, not just the Gulf states. Egypt is doing everything it can to find more and more gas in the East Med. Of course, it's a country of 100 million people, starved for gas, starved for electricity. And Iran, if indeed things open up there, if indeed these current talks result in some positive new dawn there, well, the energy production that could be harvested out of Iran is substantial, both on oil and gas. And I think we mentioned Qatar. Qatar going, nearly doubling its LNG production in this current expansion period. So that is the Middle East. And of course, maximum energy doesn't have a free runway, right? There is the world, right? You're going to maximize energy production. You got to sell it to somebody. You got to do something with it. The biggest world event this year that plays into of relevance to the whole world, of course, and most notably for us, from the point of view of maximum energy being, again, we're going at this conversation from the prism of this region, maximum energy. China has been the market, the incremental demand growth market for the last 30 years. We have grown our energy, particularly our oil and gas production, predominantly targeted at the incremental demand growth that China has delivered to the world. Closer to 1 million barrels for much of those decades a year. Now closer to under 500, 400,000, and now maybe this year down to zero, i.e. no growth. So peak China, from the gateway of energy demand, oil demand in particular, is of great relevance in the context of the immediate idea of maximum energy. We are now starting a year where China, after 30 years of significant demand growth for oil in particular, is now reached a peak, a plateau, possibly to decline. But the peak China thesis is not just about energy. It's about water. It's about demographics. Long before Donald Trump came to kick China in the shins, there was already serious challenges that they're facing in terms of water. You have 40% of the industrial production, agricultural production in China is in the north of the country. 80% of the water is in the south of the country. How do you get it up to the north? Through creating these massive directions of rivers and all sorts of madness. Is that me? No, hopefully not. My wife always gives out to me. I never have my phone on ringer, so it can't be me. No, but so peak China is from the point of view of some very fundamental challenges. China has to go to the world for many things, obviously, but when you look at agriculture, they essentially import water through the acquisition of soybeans from America, because that's where the water is. There's a lot of requirement. When you think of a water shortage in China, you have to think, what does that translate into so many other things from the point of view of heavy industry, heavy water-intensive industries. Can they continue manufacturing Barbie dolls for 2 cents, consuming huge amounts of water? When you have no water, you're redirecting, you're causing all sorts of environmental challenge to your country in order to get water where it needs to be, and it's already scarce. So water, peak China is about many different things to me. Because I think that's ultimately from our relevance in the Middle East and probably anywhere in the world, but certainly here, we have to really start to comprehend what the opportunity and the challenge of peak China is. Demographically, China's population started to decline 2 years ago. China's working age population started to decline 10 years ago. China's dependency ratio, the number of people depending on the working population per 100, is now close to 50. Not 70 like Japan, which is a huge demographic crisis, but China, the dependency ratio is both young people that are dependent, kids under 15, old people, older, I can't say that anymore, old, because I'm 38, but 65 and above. That is the combination of those two, dependency on the working population, is now close to 50%. And the challenge is that it's growing quite fastly on the older side. So the percentage of over 65s that have become part of the dependency has doubled in the last decade. And the median age is now 40, So the demographic challenge that China faces is significant when you think about what that translates to from a cost point of view, retirement, healthcare, etc. Peak China, 1st of January this year, they raised the retirement age for men from 60 to 63, and for women up to, for different categories, blue collar work versus white collar work. But blue collar work was 50 to 55, white collar work was 53 to 57 or something like that. But ultimately, the first year since 1978 that China has increased the retirement age. And that's not unique to China, we're seeing that in other places. At 50% of dependency ratio, from an OECD point of view, they're actually not too bad. When you think Japan's at 70%, a lot of Europe is now well past 50%. They have the wealth, of course, but huge challenges coming for Italy, Germany. Part of that demographic, that peak China, in 1970, births per woman in China, 6 children per woman in China, now it's down to 1. That's obviously any measure. To reproduce your population, you need 2.1 and above. China and many parts of Europe, but China being the point, is got massive demographic challenges. What does that mean? Forget about tariffs and trade. What does that? Do you continue to have massive labor-intensive manufacturing that needs thousands of people in factories when they're all getting a bit old? Or do you have to shift that economy in another direction that's more white-collar, more brain power, less manpower? So there's all sorts of reasons why the challenge is coming to China, but I'm pointing out today some of the sort of behind the curtain noise from tariffs and trade wars. And no, these are deep-seated challenges that will be there a while, and ones that we need to think about. And in all of that change, energy consumption at best can plateau. And from our point of view, oil, predominantly biggest customer for the Gulf states being China, that the outlook for that to plateau would be a good outcome. Increasingly, one might say, to decline, because of course they're looking at renewables in a very big way. They're looking at gas from the point of view of power, but predominantly massive coal. So these are some of the peak China challenges. And of course, when you think about peak China intersecting with maximum energy, then you start to see how, if the UAE is going from, to 5 million barrels a day capacity, and Iraq is going to 7, and we haven't even talked about what Iran would do if it was free from sanctions and how fast they could grow their capacity. What check does that have on a maximum energy opportunity? You want to start thinking, well, maybe we need to think about this a bit. Where are we going to sell all this stuff? Oh, now we're looking at the OPEC plus countries, the 8 countries within OPEC plus, raising oil supply this month, next month, tripling their this month number into what would generally be regarded as a pretty weak outlook for demand. Why are they doing that? Does that make sense? Well, maybe there's some other bigger narratives, bigger picture play at work. At some point, does the Gulf states, does the low-cost oil producers go, we have to maximize production for return rather than controlled supply to maximize price and knock out the bigger, higher cost producers that we're keeping alive in other parts of the world. These are some of the bigger themes, perhaps, of maximum energy. You can't imagine that we live in the UAE, that the UAE is that keen to spend $20+ billion to build an extra million barrels a day of oil capacity to keep it mothballed. Maximum energy going to market, Saudi Arabia carries about 3 million barrels of idle capacity. Costs a fortune. But, okay, maximize price, get the return, do the math, So at some point that looks like maximum energy interacting with peak China. To me, that means we're getting closer to the day in which, take off the gloves, all bets are off, produce what you can, low-cost producer wins. That's where the nexus comes into play. The third is probably no surprise. The galaxy, the meteorite that we don't know, or we do know, but we don't know the scale, the Trump punch, as we call it. What that does, we're seeing it materialize now predominantly through the trade tariffs, definitely, that is a big one. But the thing about the Trump punch, which was always expected, to the extent that it has been delivered, maybe has shocked most to the scale and the speed, but the double side to this narrative of the galaxy, the meteorite, is punch Trump rather than Trump punch. Right? We all kind of knew the Trump punch was coming in whatever variant of form or whatever it would be, and we still don't really quite know what it is. Is the tariffs on? Is it off? But the punching back, Trump, China punching back. What will Europe do? What does the punch back look like? So there's two sides to that coin, which are going to obviously have a great bearing on the current 2025 reality. In the Trump punch, there's all sorts of byproduct consequences. One of the biggest, which we saw just last week, which is the credit worthiness of the US bond market. The 10-year bond market went in 2 days up 70 basis points or something. Not so. The change is obviously dramatic, the speed of change. The Trump punch can have unforeseen consequences and seen consequences. So how that intersects with our universe, with peak China, with maximum energy, will he maximize pressure on Iranian oil production, which we're now seeing two things happen at the same time. Nuclear talks in Rome on the weekend, music was positive. Meanwhile, on the other side, sanctioning Chinese refiners who are receiving Iranian oil, the imposition of locking down the 1+ million barrels a day of oil supply that Iran can deliver as the first administration will. The outcome of this actually looks probably more dramatic. Failure of the nuclear talks is not sanctions. Failure of the nuclear talks appears to be war. Not we're going to reimpose sanctions. Sanctions are already reimposed, and the way and scale in which they will be closed down. According to Donald Trump, that's what he's saying. And I do think at this stage we should listen to what he says, because as mad as many of the things are, they seem to be, they happen, some of them. Enough to be, so the consequence of these talks not succeeding, Trump punch, could be obviously pretty consequential for everybody in this room. The sanctions, maximizing pressure on Iranian oil exports, creates, as it did in the previous administration, the consequence was that Iran didn't get to export much oil, and obviously that gap in the market had to be met by others if indeed there was a demand opportunity. But that's where you get to punch Trump in very tangible ways. OPEC Plus just increased supply this month by a little bit. Next month they're increasing it by even a lot more. What they're going to do the month after that, are they anticipating that there will be a demand supply squeeze coming? So the intersection between the Trump punch and maximum energy, the US is the biggest oil producer in the world, the biggest gas producer in the world, and there's a very determined administration to facilitate the US energy industry to use, quote an overused phrase, but nonetheless, for effect, drill baby drill, the idea that the US oil production industry can add more and more capacity, at least regulatory oversight will be removed and incentivized to do so. What kind of a challenge is that to the lower cost producers? We saw the shale industry 10 years ago have a devastating impact on the oil price and the oil revenue of this region. Does Trump present the similar challenge going forward with maximizing their energy beyond where it already is? So that's where Trump punch and maximum energy can play. Peak China, obviously Trump is kicking China pretty hard at this moment. What is the outcome of that from the point of view of China growth, but also US growth, US inflation, interest rates having to stay higher for longer, etc. So the intersection of all of these three are what I think about literally every day when I get up and do my scan across the news digest of the world. I'm thinking about these three things and what they tell me about the direction of travel for this year, this day, this week, next month, and each of those intersecting with the other, the nexus between two, the nexus between all three, and in there's opportunities and there's challenges, and that's really important to note, obviously. But it tells you a lot when you get inside peak China. A lot of people get distracted by that meaning peak oil demand in China. No, it may mean that. Most consensus is now that it is peak mobility fuels in China, gasoline and diesel. Maybe not peak crude oil. But there's generally consensus that we're already at peak mobility because the volume of EVs versus hydrocarbon, fossil fuel combustion engines is, all the data is there. But peak China means many other things, as I mentioned, demographic and water in particular. And if you go down those rabbit holes of demographic and water and sort of dig into what they mean, and where they are, and what are the solutions, or what are they not, or the consequence, I think you start to see, where China's going.